Hi everybody, Russell Markham from VectorVest. Thanks for your patience. Sorry for the technical issue we had this morning, but let's get going. So all that glitters is not gold. We're checking the chat box there. Our picture should be coming through nice and clearly along with our sound. So there we are. Let's jump into it. So first thing first, please note, I might just have to move myself out the way here, our license number there, and you can also check out us on our webpage to see our financial services guide. In addition, please note, I'm only licensed to give general advice. Please do speak to your financial advisor for personal advice. Past performance is not a guarantee of future results. Forecasts and back tests used or discussed in this presentation are intended as a guide only, and actual results may be affected by known or unknown risks and uncertainties, and therefore may differ materially from the results ultimately achieved. All right, so let's get into it today. So here we are, the spot price for gold here. And you can see over the years there, since 2000, it's been about 350 to 400. It's rocketed all the way up to nearly $2,000 an ounce. This is US dollars per ounce. And you might be thinking to yourself, wow, a lot of mining companies out there in the gold industry should have made a small fortune. And as the title noted today, all that glitters not gold. That's certainly not been the case. Why? It's an expensive and difficult process and risky process to deliver gold to the market. So don't be fooled by the spot price. The spot price may not necessarily represent how a company goes. So what we're going to do today is we're going to identify the companies that have performed best globally thanks to a high spot price. So here's an image. I thought this would be interesting to share with you today. I found this one on Reddit, and I was looking up, for interesting images to do with gold that I wanted to share with you today. So if all gold that has been mined to date, if all of that effectively was stacked up into like a cube, this is how it would sort of look compared to a pyramid in Egypt. Very small, not a lot of gold has been available since its first discovery, and so interesting to see. And how does this stack up? The scarcity, gold being rare. So I can't vouch for the validity of this drawing here, but on the next slide here, this is from gold.org. I think they do a great job there with their research. So they note the best estimates currently available suggest that around about 205,000 tons of gold has been mined throughout history, of which around 2/3 has been mined since 1950. And since gold is virtually indestructible, this means that almost all of this metal is still around in one form or another. If every single ounce of this gold were placed next to each other, the resulting cube of pure gold would only measure around 22 meters on each side. So that kind of coincides with that image that you saw prior. So gold world reserves, you can see here United States, Germany and Italy have some of the largest gold reserves in the world. When you look at this, you think, well, these should be the biggest producers. There's a big difference between producer and reserves. You can have a lot of reserves, but a lot of the time those reserves may be uneconomic at current spot prices. So if you've got, in the US over 8,000 tons of gold, how much is it going to cost you to mine the gold? And a lot of those reserves are probably not very economic at the moment. They're very marginal. So it just depends on how easy it is to get access to. If you look at Australia, Australia's got about 79 tons of gold left in reserves, at least right now that we know, and as time moves on, further resources will be identified. But right now, so you look at this and go, oh, hang on. So Australia's got, 79 tons of gold, yet all of these countries here have got much, much more. This is reserves, remember. All right. If you've got 79 tons of gold that are easily mineable, it's infinitely more valuable than having several thousand tons of gold that are very expensive to mine. So don't be fooled by reserves. It's also got to be economic as well. So we want to find those companies on the Australian Stock Exchange, for example, that have access to easily mineable reserves that they can bring to market at a good profit. So moving on a bit here, you can see world gold mining in tons. You can see, look at that, China, Australia, Russia, and the US are some of the biggest miners out there. All right, but if you look at the slides previously, look, Germany, Italy, France, they've got massive reserves, but yet they're not really featuring in here, are they? Because they're not necessarily easily accessible. Moving on, top 10 largest gold mines in 2021. And you can see here, look at that company there called Narvoy in Uzbekistan, to pronounce that correctly. Then you've got the US, Indonesia, Russia, United States, Dominion Republic. All right, but notice how it sort of drops off quite quickly. All right, so this is in thousands of ounces, so 2,000 ounces. And if I've done my mathematics correctly, working this backwards, it's about 50 tons. So these guys mine around about 50 tons. Any mining engineers here can confirm my numbers there. You can work it, back to kilograms and then tons and whatever have you. So my rough calculation there notes it around about 50 tons, and then you can see how it really drops away. Interesting to see that world snapshot there, but you can see just how that's sort of taking place around the world. Richest gold mines in the world in 2021, and this is interesting too, because when we refer to the word rich, we're not saying these companies are making a lot of money. We're referring to them being rich in the fact that they have a high ore reserve, that being the gold ore reserve. So if I had a ton of dirt to mine that had gold in it, but for every ton I mined, I got 1 ounce of gold out of the ore. So I had to put it through my processing plant, and it extracted the ore and whatever have you. There's a lot that goes in behind the process to separate the gold from the ore as such. And I can only get 1 ounce of gold out of that ton. It's not going to be very economic to mine the stuff, because how much does it cost you to move a ton of ore? How much does it cost you in electricity and labor and whatever have you to separate out the gold from the ore? And if you look at it, you wouldn't be making a lot of money, right? So what we talk about per the richest gold mines in the world, done by kitco.com, great bit of analysis that they did there. As an investor, we're looking to find some of the highest grades out there, because surely those companies that have rich grades of ore, they should be more profitable. But you'll see as the analysis takes on further on today, you'll see that isn't necessarily the case. All right, because interesting, I'll break it down to 3 that really stand out. And you can see here Kirkland Lake, which operates both in Canada and Australia, they've got very high ore grade. All right, so you'll see here in terms of the grade, gold grade in Q1 2020 grams per ton, and then also in 2021. So the grade over here, you can see 19.8 grams of gold per ton mined. All right, and you can see here, 19.8. Notice it dropped all the way from 42.4 in 2021 for the Australia operation, very, very rich gold reserves per ton, all the way down to 19.8. So a massive fall off of 53%. Why might that be the case? Because they're probably mining the easy stuff at that stage that was very rich. Maybe it was surface sort of orientated, easy to get to. That's generally where the mining companies start, with the easier stuff, of course. And they happen to run into a couple of rich veins of gold, very high concentration. And then as the mine continues, it drops away. But you can see the actual richness, not that rich. As you can see, it starts to drop away very quickly. All right, so to get around about 20 grams per ton is incredibly a good grade out there. All right, so what we do at VectorVest over here is we track and analyze all of the gold stocks out there each day in Australia, and we're currently tracking there 185. So if you go into VectorVest, you can find 185 gold stocks, and the idea is to identify the glittering gold stocks, but avoid those that are not performing well. So all that glitters is not gold. So what I mean by that is the glittering ones that are doing well and avoiding the bad ones. All right. Let me give you a quick overall snapshot here. Right. So this is all the gold stocks out there that we track in Australia. And if I pull it back all the way back to 2007, you can see a lot of these gold stocks have not done very well. Sure, there's been a bit of a bounce back since 2016 up. It's sort of coming again, but a lot of companies that were doing well back in 2007, 2008, 2009, a lot of them have struggled quite a bit since. All right, so that's the overall snapshot. So you look at this and go, oh, hang on, I think there's some truth to that title there. All that glitters not gold. Surely these gold stocks should be doing well because the spot price has been going so well. Well, let's drill in a bit further. That's the big picture. If we drill in over the last 6 odd years, about 2017 through till current date, you can see here it's gone nowhere. It's sort of bounced around. But if you go to that gold spot price that I showed you right at the start, since 2017, the spot price has gone up quite a bit, right? So you can go back and look at the spot price. There's certainly been periods of it tracking along nicely. So what gives? You know, how are we going to separate out the good from the bad? How do we find those top performers? All right, so the idea being we're going to find those top performers. So just a bit more of a snapshot in VectorVest there. Just per the other day, 13th of May, I did a snapshot of some of the gold stocks, and you'll notice there that the prevailing note over there is they're either buy or sell rated. So we give a company a buy, hold, or sell rating every day, and you certainly want to be careful of the sell ratings, but you know there's not any buy ratings flashing up, telling us that the fundamentals and technicals on average are not as strong as some other stocks in the database that we track each and every day. So, you know, just I'm pointing it out there that, you know, all that glitters is not gold, certainly in this industry currently. It's not to say we can't find some top performers. So if I were to go in to the VectorVest system and just say, look, find me companies that are in the gold industry, and make sure that the sales are at least 50 million Australian dollars a year, because we don't want non-performing type companies. And make sure that you get me a net profit margin. What do I mean by that? Of at least 10%. So for every $1 of sales that a company is making, make sure that I'm getting at least 10 cents in the dollar. All right, so 10 cents in the dollar would be useful. Okay. And make sure that those companies are looking to grow their earnings by at least 5% or more. All right, so 5% or more. If I run that search in VectorVest over here, I just find a handful of stocks. Look at this. What's that? 2, 4, 6, 7 stocks in total that meet that criteria. We've got 185 stocks, yet only a handful meet that criteria. So again, that's telling me something, right? Keep going a bit further. Let's continue on with the big picture here. Here are some of the biggest gold producers in the world. So I got this from Wikipedia. They do a great job at breaking it out for us. This was until the end of 2020, so there'll be an update for 2021. But I thought this was a good neutral type view. And you can see here, Newmont Gold Corp right up there as your biggest revenue earner. Barrick Gold in Canada, Franco, Nevada, Canada. You've got Russia, Polyus Gold. And you can see Crest Mining comes in at number 6. All right, so we feature in the top 10 there with Crest Mining, but you'll see a lot of it's made up of Canada. Canada features very heavily in here. And for those of you wondering why South Africa doesn't feature in here as much, only 2, a lot of the reserves in South Africa have been drawn down. If you come back 10 years earlier, you would have noticed a lot more of the South African gold companies. All right, moving on a bit more. Let's take a bit of a snapshot now at our big producers. So there's Crest Mining. All right, so remember that was right up there in the list over here. So you can have a look over here. Here's Crest at number 6. So I want to introduce you to a new feature on the graph here. All right, so subscribers know exactly what this is, but if you're new on here, here's the price, and I've put on this one over here, EPS. Earnings per share. It's a 12-month leading forecast on earnings. So you can see the earnings started to turn around here, started going up, and away goes the share price. And the earnings have been chugging along, come off slightly as the price came off, sort of going sort of sideways with a slight movement to the upside. All right, so they're not a stellar set of earnings at the moment. It looks to me that Crest Mining has certainly done well as the spot price has picked up, but it's sort of tracking sideways quite a bit, and that's being represented by the earnings. It's got a good, upward momentum to some extent, but in recent times it's been going sideways. All right, if I look at Crest Mining over here, in VectorVest, I can look at the sales in millions of dollars. You can see sales have been chugging along quite well. They've just come off slightly in recent weeks and months. And your net profit margin, so for every $1 of sales, what are you making in dollars and cents? You can see Crest Mining is doing about 20 cents on the dollar. So it's pretty profitable, is it not? But this is what's going to start impacting if sales continue to fall away. There's only so much that net profit margin can make up. So at the moment, net profit margin is coming up to try and help offset some of the loss in sales. But ideally, you want this to be going up and your net profit margin to be going up at the same time. Newmont Corporation, so there is one of your other big ones there in America. Look at this. This one was interesting. Is interesting because the earnings are falling away currently. So it's under some earnings pressure. Share price is sort of continuing to move up. It's a bit more explosive than what we've just seen. All right, so it's a little bit more explosive than Crest Mining. It's certainly moving up, but this is of concern. You want to be careful about companies where the earnings start dropping away because we're seeing time and time again falling earnings, falling share price. So this one here looks like it's under a bit of pressure, and you can see in recent days, look at that, the price has really started to fall away. Moving on over here, Newmont Corp again. Let's look again at the sales. So you've got to hand it to them. They're really doing really well in their sales. They must be really working hard behind the scenes to get the gold to the market. But their net profit margin has been dropping, right? And that's why it's been reflected in those earnings. Look at that, the earnings are starting to fall, and that's why because your net profit margin is starting to become less and less appealing. It's still very attractive at just shy of 20 cents on the dollar, but it's come off from around about 30 cents. So, when I'm seeing those earnings falling away, and when I'm seeing that net profit margin starting to fall away, it does note to me to be. I certainly say, I've got to be careful because of that strong correlation between earnings and share price. Barrick Gold here, so this is the Canadian one, ABX ticker code, using VectorVest. So our subscribers, of course, you can get access to the Canadian and US market, all part of your subscription. So if you're wondering what this is all about at the end, we'll give you a link to take out a trial. You can get access to all these countries and do this analysis. So ABX Gold, another big one there in Canada. So I'm going back to that Wikipedia, the top 10 gold companies there. So ABX was one of them as well. And you can see here that the earnings have been they've been trending up, but they haven't been stellar. They've just sort of tracking slight bias to the upside, but quite sideways in recent months. And you can see it in the share price. The share price is sort of there. The earnings went up there. The share price went up. Here the earnings start sliding and faltering, and the share price kind of comes off. So Barrick Gold, it looks like it's under some sales pressure at the moment. Sales have been falling away slightly, not massively, but a slight tapering off in the sales. And the blast off phase on net profit margin seems to have gone towards a slight sideways downward sort of trend. Moving on a bit more here, FNV, another Canadian one, Franco-Nevada, great sounding name that, rolls off the tongue. You can see, look at the earnings, beautiful set of earnings. So this one jumps out at me. I go, wow, what are you doing? You're doing something right here because those earnings are going up much better than the other graphs I've seen so far. Let's drill in a bit further. Ooh, look at this. Okay, now we're talking. Sales are growing. So they're doing something right. They're really cranking those sales out, and hats off to them. They're keeping their net profit margin at a stunning 50+%. So for every $1 of sales that these guys are doing currently, they're making over 50 cents profit. All right, so their profit margin. So, keep these sales coming, because if you keep those sales coming at that profit margin, you can see it becomes effectively very profitable. Moving on a bit more here, AEM, right? Agnico Eagle. They recently did a merger. They're one of the biggest mining companies out there, if I recall correctly. Did they do a merger? But you can see here they're under a bit of pressure on their earnings. You're seeing that on the share price. Sales are still fighting hard, but your net profit margin is becoming a bit lumpy. It's sort of, there it's sort of dropped below 20%. It's shot up again, but it's coming off again. All right. Moving on, Kinross Gold mining here, and a lot of these companies, just to be clear as well, they're not perfect gold mine is. All right, so a lot of companies that mine for gold, there will be some additional ores that fall in as they mine. So they might get some copper, silver, some other stuff that they mine as well. All right, so Kinross falls under the gold mining classification, but it includes gold and silver. And you'll see over here that the earnings are under a bit of pressure. You can see the share price really starting to fall away as a result. Let's drill into their sales and their net profit margin. So you can see that's why sales have really fallen quite heavily, down about what's that, 20 odd %, and your net profit margin's under a bit of pressure too at the moment. Still very good, but it's come off. All right, so top 5 by market capitalization in Australia. So we looked at the world and we picked on some of the key ones around the world. Let's look at Australia. So our top ones there by market capitalization. What I mean by that, it's just simply the share price, current share price times the number of shares outstanding. All right, so the number of shares out there, and that gives you effectively the total value of a company. It's a fancy way of saying basically the total value of a company. So what are the biggest gold companies out there effectively? So you can see over here you've got Crest Mining, Anglo Gold, Northern Star, Evolution Mining, and Ocean Gold, OCG. All right, those are the ticker codes. Let's go and have a look at how they stack up. So bigger is not always better, as you'll see here, right? So you see over here, this is one of our biggest ones here, Anglo Gold. And look at that, earnings going sideways, share price under pressure. Next one here, AGG. Again, just looking at their sales. The sales are coming off slightly, and net profit margin shot up massively. So they hit a great reserve from the looks of it, grade at one stage, and it's sort of tracking back down again. All right, so there are calculations behind it. We can show you exactly how this is all worked out, but at the moment, those sales are under pressure. Northern Star, earnings were under pressure. They've come back up, so they're fighting hard again to drive the earnings up. Sales just continue to power on, very impressive. Those sales operate really, really well. Your problem at the moment is your net profit margins coming off a bit. So they're making up more for it, more and more of it on the sales. It's a difficult game when you're trying to make up for lost revenue by continuing to ramp up your sales. This is not sustainable. All right, at some point you're going to have to level off. So they're probably hoping they're going to start hitting richer veins of gold, which give them better profit margins at a guess. All right. Again, I can't comment on this. I'm just looking at the numbers and trying to interpret what the story may be. All right, I'm sure those of you in the mining industry would know much better than I. All right, so I'm just looking purely at the numbers. Evolution Mining, again, solid set of earnings, but not stellar. And you can see, so the sales along with the net profit margin, 20%, and sales are just coming off slightly in recent weeks and months. All right, Oceana, I called it Ocean Gold, it's actually Oceana. All right, just abbreviated it there. I needed to put the A onto it. But the Oceana Gold, all right, you can see earnings just sort of flatlining a bit over there. Sales sort of flatlining as well. Net profit margin still holding steady around about that 20% mark. So a common theme with the mining companies is that 20%, but every so now and then you get that stellar one that jumps out at you, and I showed you that one there where it was over 50%. All right, so you might be looking at these and saying, well, how do I get these explosive gold stocks? One such methodology, and we taught this, you might want to look on the YouTube channel there for VectorVest Australia. Last week we taught you how to find some explosive ETFs breaking out in price. And for those of you that attended, one of the techniques we spoke about was finding companies where the relative timing had broken above 1, as well as the comfort index CI. This is on a scale of 0 to 2. It's looking at how smooth, effectively, the resilience of a given price, in this case a stock price or an ETF. Right? Are they testing new highs and resisting severe and or lengthy declines in price. And the companies that are continually sort of tracking up nicely are going to get a nice high CI score on a scale of 0 to 2. So when it breaks above 1, it's often a good sign. And you combine that with our short-term price momentum being relative timing on a scale of 0 to 2. So if you can find it where CI and relative timing are both above 1, that bodes well. So you can see over here it went below 1 on the relative timing. Relative timing is purely looking at short-term price momentum. So it's a momentum indicator. CI is looking at the consistency and reliability of a company's share price. So if these are both above 1, it bodes well. So here it went below 1, breaks above 1 here. I just said for argument's sake, I'd wait a bit just to absolutely confirm it was going to hold above 1. There it's definitely holding above 1. CI breaks above 1 here. It continues to remain above 1 here. This is a good opportunity to consider, for example, jumping in. So you can see it went from 34 cents all the way up to just shy of $1. If I look at another one here like AS2, right, Ascari Metals, and you look at this one here, look, CI breaks above 1 just around about here. Technicals being well above 1 as well. There's another potential entry point, 34 cents, and it goes up over 70 cents. So you've got these short-term technical opportunities using the VectorVest system as well. But today I want to just purely concentrate on making sure that the fundamentals are also lining up with the technicals. So what if we were to go out there and find companies that have a rising set of earnings, a rising set of these being gold companies, rising set of earnings, rising set of sales, steady net profit margin, so they must be holding steady or going up. The comfort index that we looked at, the CI score, remember, those consistent, reliable, upward trending companies, must be above 1. And the earnings growth rate. This is a new term I'm going to introduce you to here. This is where a company is looking to grow its earnings. So in other words, when we went back and looked at those EPS profiles, we must make sure that the outlook is positive, not negative. Well, putting it on a graph, let's demonstrate here. All right, so coming in here, look at this over here. PRU ticker code, Perseus Mining. So if I look at this one over here, very, very nice indeed. It's got a great set of rising earnings. All right, please do speak to your financial advisor. I can't tell you whether this is right for you or not, but just using the VectorVest system, I can identify this. Great set of earnings. Net profit margin, steady. It's around about that 20% mark, but 20% mark. But I like the fact that the earnings or net profit margin is holding steady and rising. Beautiful set of sales. They're going up and up and up. I'm looking at the trend. CI, it breaks above 1 here. It's holding above 1. This is a company that jumps out at me. It ticks all the boxes, a gold mining company that ticks all the boxes. Canada. West Dome Gold. This one jumps out at me. Nice rising set of earnings. Sure, they're flatlined a little bit here, but still the trend is still very good. Net profit margin, although it's come off slightly, who's complaining? It's it's over 50%, just shy of 60%. So just shy of 60 cents in the dollar for every $1 of sales. Wow, that is phenomenal margin there, considering that the average top gold stock that we're looking at is 20%. Sales, textbook, just absolute textbook, rising set of sales. The comfort index here breaks below 1, then comes back up above 1, sort of getting close potentially to breaking below 1. So that's the only thing I'm concerned about. But overall, you've got to hand it to WDO. They've got some great fundamentals along with price performance behind them too. So there you go. The ones that jump out, Perseus Mining, WDO, West Dome Gold in Canada, and Core Gold DNG ticker code in Canada. Well, a few of you then might be saying, well, okay, I could identify some of those top gold stocks, but why bother? Why don't I just buy an ETF, exchange traded fund, that holds several different gold stocks at any point in time? It might hold up to 30 or 40. So I thought about that. I thought, yeah, it's a fair point. Let's go and explore a bit further. So again, I used the power of VectorVest, and we'll jump into VectorVest shortly. I used the power of VectorVest to go and find some of those ETFs around the world. So in Australia, the one that jumped out at me was this one here, PM Gold. All right, Perth Mint, I think, gold, PMG Gold. Look, this one over here, GDX, certainly had higher peaks, but it was more volatile. I thought PMG Gold certainly was the smoother operator, and certainly ended up at the highest return. So since 2017, it's gone up just shy of 60%. So this is in percentage points, and I'm just benchmarking these all against each other. All right, so starting here, all even Stevens, and from that point there, we're benchmarking. So PMG Gold, just shy of 60%, and it's had a bit of drawdown, but it's been the smoother of the ETFs. And then you can look at all the others in here. So QAU, should I say, ticker code, just over 20%, and this gold one here, this ETF, it's done pretty well. It's over 50%. All right, but my pick is, I like the look of this one here, PMG Gold, but that's just me. Please speak to your financial advisor for what's right for you. I can't advise. ETFs in Canada. All right, so here we are, the ETFs in Canada. The one that really jumped out at me was XGD. So since 2017, look, it's done, you see on the graph here, it's done just shy of 40%. So if you go and compare that to Australia, I'll just go back a tad again. See, here was Australia. Look how well Australia's performed on the ETFs, just shy of 60. Canada's one comes in here just shy of 40. So Australia's ETFs are doing pretty well. Canada's doing really well too, but it looks like the Australian ETF there, PMG Gold, was the clear performer between Canada and the US, or should I say Canada and Australia. But let's look at the US. It's sort of tied for first place in the US because, look, DGP is over 50%. So it's right up there as well. It's done incredibly well as well. Look at all the different ETFs. I need to jump into VectorVest to show you. I just had to trim it because there were so many different ETFs. But you can see there were quite a few that had not done well. See, and that's your zero marks. Everything below here is in negative territory. All right, so you've got quite a few that have done really well, but you've also got a few here that haven't done well. So the idea being that you need to pick out the performance from the non-performers. So DGP was the standout since 2017, returning just over 50%. So at this point, what I'm going to do now is I'm going to jump into Australia, and I'll just show you how I've done all this. So in Australia, for VectorVest, what I can do here is I can minimize this and bring it over. Here we go. So this is our performance graph, and this is where I put in the ticker codes for the ETFs, and I can benchmark them against each other. What I also did as well is in here I've got all the different gold stocks. So in here I've got 185. So there you are, all 185. And what VectorVest does each and every day is it ranks and sorts all those stocks with the best combinations of fundamentals and technicals at the top of the list, and the worst ones down at the bottom of the list. So, West African there, WAF, ticker code, mining company there for gold. And if I change my layout here, I've created a nice gold layout. There it is. There's my gold layout. So if I zoom in and have a look at it, I can see over here, okay, earnings holding steady, net profit margin holding around about that 20% mark, 20% should I say, sales coming up a bit, and your CI above 1. So if I pull that back a couple of years, you can see how that's stacking up. So this is one of the top performers right now, currently. But even one of the top fundamentals and technicals is coming under pressure. Look at that, a hold and a sell rating kicking in. So you can come in each and every day and double check on the performance taking place. The reason why I'm bringing this up is because VectorVest will save you a lot of time. Each and every day you can come in and look at all the different gold stocks, and you can start your analysis at the top of the list here. If I revert it down to the bottom of the list, And I've just created a watch list in VectorVest here. So to our subscribers, this is not in there. You just create your group and then your watch list and populate as you see fit. But if I show you that the last couple here, where the fundamentals and technicals are not stacking up that well, let's just do this just to make it easier to see. Let's just purely look at the price, and you can see over here, all right, these are the ones that you want to be careful of, because at the moment they're under pressure. All right, so you can see, and this is typical of a lot of gold companies out there at the moment. They're under pressure. A lot of them are sell rated companies at the moment. Very, very few are buy rated. In fact, in Australia at the moment, none of our gold companies are stacking up as a buy rating. Okay, so just a quick whirlwind tour there of Australia. If I bring this up for Canada, so let's do this. Let's bring up Canada. I did the same type of exercise again for Canada. All right, 551. So this is gold and silver. And you'll see even the top ranked one here with fundamentals and technicals is under pressure. It's currently sell rated. There are no buy rated gold stocks just yet. All right. Where is the market at the moment? The market's under a fair bit of selling pressure at the moment. So no surprises there for identifying why that is the case. So, you want to wait until the market picks up, and then at that point the opportunities will start presenting themselves. So you can see over the last 5 years for Canada, you can see a lot of those gold stocks have been under a fair bit of pressure. All right, and then for the ETFs, these are the ETFs in here. So you can see quite a few ETFs in Canada, and you saw some pretty good performance there that took place. All right. So on the gold stocks, I think this is one we looked at, the 551, and there are your gold stocks. Let's see, I also created one here called all gold stocks, and okay, I hadn't populated. I was going to put in the ones that really jumped out, but I think I've already shown you that on the slides. Okay, and then in the US, so for those of you wondering what made up some of those ETFs there, I wasn't able to show you all of those ETFs because there were so many. So on here, I'll just go to viewers here, viewers, and I've put it in a watch list here, and I believe I called it, did I call it gold or my watch lists? There was one there called gold. I'll just go and find it here on here for you. So what you can do every day is in VectorVest, you come in here. There's lots of different watch lists set up for you. So you can see lots of different ones in here. And the one I'm wanting to find here is gold. All right, so I just need to scroll down until I find gold. All right, and there's gold ETFs as well. So here are the gold ones. And I'll just clear at the moment. So I've got gold one in there at the moment. That's not the one I wanted to show you. But there's one that's got a whole lot of gold. But here are the ETFs, 27 in total. Okay, so 27 in total. If you wanted to find all of the gold stocks, I just put a handful in and sort of cleaned them out. Stocks, filter by, and in here I'm going to say industry group equals, and then in here under selected industries, I can come in here and find what I'm after. All right, so I can come in here and look for, say, mining, and whatever have you. Mining, here we are, gold and silver. So if I push OK, run the search, then VectorVest every day can come in and note all those gold and mining companies for you. And then what I can do in here is I can say, find me the companies where the earnings growth rate for those gold companies is greater than or equal to 10%. So I'm looking to find those companies that are growing their earnings in that gold industry. So straight away, I've now whittled it down to a few stocks. And then maybe the final check and balance is I might say sales and market capitalization. Make sure that this company is greater than or equal to, this is in millions, so let's say at least 150 million US dollars. All right, so that way I'm not dealing with small companies. All right, so I could even make it bigger, maybe 500 million. Let's see if that sort of whittles it down a bit more. So there you go. You've just now got a handful of companies from which you can then start doing your analysis. So if I look at the top one here, we know that that meets that certain criteria. I look at the graph and I say, well, hang on. would this be one that I'd rush out and buy? It's under a bit of downward pressure. It looks like it's an ETF. Let's bring up the next one here. All right. No, all right. So it's coming up, but it's sort of under pressure, and those earnings, despite the fact that the outlook is still positive, those earnings and it's sell rated, it's under a lot of pressure. So hence, I've done a lot of the hard work for you in VectorVest already. It's easy to find once you know how to use the VectorVest system. But if I come back to my slide set just to show you, let's hop back to it. So those were the three. There we are. These are the three that jumped out across United States, Australia and Canada, right? So they're the final three. If you can find that taking place, right, like with Perseus and WDO, and you can find that with DNG, then you're on to winner. All right, so how quick and easy does VectorVest make that to find for you? I'll show you the Australia example. So we're just about finished, and I'll bring up the Australia example just to show you on here. So if I come into Uni Search for Australia, stocks, filter by, industry group, equal to, selected industries, and then I come into here and I go, okay, in this case it's materials gold, so I'm purely finding gold. Make sure that the growth rate, earnings growth rate is at least 10% or more, looking to grow their earnings by at least 10% or more, and let's make sure that the sales in millions is greater than or equal to at least, let's say, 30 million. All right, run the search, and straight away, there we are. I've only got a handful of stocks, and surprise, look at that, there's Perseus Mining. All right, that was one of the ones that stood out. One of only three for me using the VectorVest system that stood out. So that's how you do it. So once you then start identifying it, then you can start graphing it. All right, see how quick and easy that was to do. And then you can set your layout. For example, I've created a gold layout for myself, and now I'm looking at it. So I'm going, okay, this is one I'm going to consider. Yep, great set of rising earnings, net profit margin holds. Yep. So I'm now looking at all these things. But at the moment, it's currently sell rated. So I need to be careful. Why? Because it's under a lot of technical downward pressure. All right, so VectorVest gives you all those tools each and every day. How quick and easy was that to find? So I think I come back to what I'd noted. All that glitters is not gold. All right, there were only a handful of stocks that really jumped out in the gold industry, despite the fact that the gold spot price was going higher and higher. The research and whatever have you that we've conducted here and looked into it, one of the reasons being is a lot of these companies are under pressure. All right, the reason why they're under pressure is because mining gold is difficult. All right, and we're seeing a lot of those sales volumes were dropping off because you don't just turn up and start mining ore and hey, it's easy. I'm just going to put it into all the machines that separate out all the iron ore or whatever it might be, or not this case iron ore, but the ore that separates out the gold, because some of it hasn't really got much gold in it at all, and then other ore does have a lot of gold in it, higher grades. And you remember we saw that, to get 20 grams per ton was exceptional, right? It's a difficult industry, and as such, in that industry, you've got to identify the companies that are making the money, growing their sales, having a good sustainable margin. All right, so if you look at some of those techniques that I've shown you today, use the power of VectorVest, you're on to winner. All right, let's wrap it up. So thanks again for coming along. Let's bring up the slide sets here. So we looked at our ETFs as well, some amazing ETFs there. If you want to take out a trial, all right, so before I give you the link there, if you want to take out a trial, you can also call up a toll-free number. We're open currently, 1-800-303-782. Please feel free to email support@vectorvest.com or myself, Russell Markham, at vectorvest.com. Right, so just give you a few seconds there if you wanted to jot that down. And then the last thing I'll leave you with, if you want to take it a trial, www.vectorvest.com.au/HT. All right. The other place you can take it a trial to is on our webpage, www.vectorvest.com.au. And on that webpage there, vectorvest.com.au, there is a link for a risk-free trial. So www.vectorvest.com.au, risk-free trial. All right. The other thing I'll leave you with as well, and that is, I didn't get to go through these because the slide slides were in there, but just some of the resources there. This was the Reddit post of the gentleman that drew the picture there, and look, that's a human, and that's how much gold there is. So it's not really that big. The other thing is, this is where I got the quote from in terms of how much is left around the world. Gold reserves. So this was all in what we presented today. This is something I didn't get a chance to present on, but you might be wondering how much a dump truck can do. So, if you're getting 20 grams of gold in a ton, well, what could this dump truck do? It could do 496 tons. So if you're getting 20 grams in a ton, 20 times, say, called 500, you'll be getting about 10,000 ounces. All right, so I then went and had a look at things like you can work out, how much in a gram. This is how much you get per US dollar. So you can come backwards and work it out backwards to work out exactly what each one of those dump trucks would deliver in terms of in value, all right, in terms of gold. Doesn't take into account the costs to mine it. So these were this is some additional resources on the top 10 largest gold producing countries out there. So kitco.com does some amazing analysis and statistics. This is one such graph that we pulled in today. All right, and again, Kitco did some more great stuff on the Richest Gold Mines. This was Q1 of 2021. And in here, this was interesting. Anaco, Eagle, and Kirkland Lake complete merger transaction. So if you're trying to look for Kirkland Lake Gold, just be aware it's merged with Anaco Eagle. All right, so you can read up more about that and track its new ticker code. And anyway, this was some of the conversions there. So on some of the gold that we're looking at. So hope you enjoyed it. Take it a trial if you want to find out more. All that glitters is not gold. Tread carefully out there. Find the top companies out there in the gold industry using the power of VectorVest. Hope you got a lot out of it. We'll wrap it up for now. Bye for now.